What's going on, everyone? Happy Sunday, good evening, and happy Easter. How are we all doing today? Hope everyone's had a great weekend, relaxing one, enjoying the holidays with our loved ones. Looking forward to another week of business here with you all. Got a lot of insights to share, what I'm seeing, what I'm expecting, and looking forward to getting into it. With that being said, before we get started, again, happy Easter, and more importantly, happy birthday to my girl Denisha. Thanks for sharing your time with us on your birthday, and I hope it's a good one. So, with that being said, we'll get right into our analysis. Going into this week, some things to be mindful of. We do have the CPI report coming out on Tuesday, so that's something to be mindful of. High impact news driver on Tuesday, which will likely affect the rest of the trading week and will map out how I will navigate this week personally as a trader and investor, and what I'll personally be looking to do with my capital given the terrain that we're going to have to navigate with CPI and coming off of a holiday week. So typically from my experience, what I've seen coming off a holiday week like Passover week or Easter, we typically see Monday is a low volume day, not a lot of movement. And reason for this is because typically the Monday is the accumulation phase of the coming week. So even on a weekly chart, we'll expect our accumulation, manipulation, distribution, and Monday is typically that day, especially on the heels of a holiday and CPI on Tuesday. So I will not be expecting much on this Monday trading session. I will personally be directing my focus after Wednesday. So Wednesday, Thursday, Friday will be the days I'll personally be focusing on. I will be monitoring price action on Tuesday, seeing what they do with the CPI report, so I can have a lay of the land, a feel for the terrain that we're going to have to navigate in these next coming days after that. So with that being said, let's get right into the top-down analysis we'll be doing. As always, we do have quite a few new members in here, so I'll go over briefly what we do and why we do it. So first we look at the dollar index. This is basically the linchpin to the whole financial system. You need to know what the dollar is doing so you can have a feel for what bonds, forex, indexes, commodities are all doing in aggregate. So this is why we place a lot of emphasis on the dollar analysis. After the dollar, we'll typically look at the bond market. We'll look at the yields and the bond markets themselves, as this gives us further insight into what we should expect with the dollar index. And then this gives us our risk on, risk off analysis that then we look to trade in line with throughout the coming week. So it's a mix of inter-market analysis, intra-market analysis, and looking at several factors. And this is how we're able to do high probability analysis and be consistent with our calls and where the market is going. So with that being said, let's get right into it. So looking at the dollar index here on a monthly chart, we have seen price trade lower, and then we did have an up close month in February. March was down close, and then we've just opened April this previous week. So looking at the previous month of March, I was seeing if we wanted to continue and rally up into this fair value gap, the down close candle, SIBI, but we actually stopped dead in its tracks right at the volume imbalance above market price. So clean rejection of this premium level, indicating that the market was not yet looking to expand higher and enter a buy program. So we are likely to continue seeing lower prices on a monthly chart. What specific PD arrays and levels will I be looking for on the monthly? First will be this fair value gap that we dipped into, rallied off of, and now we're dropping back into. So my first target will be the low of February, and then looking to see how we trade into the remaining portion of this inefficiency. So quick recap, we're seeing bearish order flow, price rejected the volume imbalance, and now we have April's trading month. We open, we had a Judas swing higher, and now I am personally anticipating expansion lower into this inefficiency. So now dropping down into a weekly chart with these same levels transposed, we see this is the monthly volume imbalance that then price reacted off of beautifully here. What other confluences indicated that order flow was bearish to me? If we look at the consequent encroachment of this wick, we see that is at the 105.878 level. And then we see a nice rejection off that key level. Also an up close candle. So this would be a bearish order block. So when we're in a buy program expecting higher prices, price should trade through up close candles and through them. Instead, we traded into it, got heavy, and rejected. So this is an indication that we are likely in a sell program, and we can trust our sell models intraday to attack lower prices in discount. So we see prices rejecting premium arrays and seeking discount. We've got a closure below this key fair value gap that I was monitoring these previous weeks. So now what I'll be looking for on a weekly basis is expansion down through previous week's low and the low from the week of January 3rd. So this sell side liquidity, it does have my interest. On a weekly chart, what do we have over here that price would want to gravitate into? We have a fair value gap in this level. And this is the fair value gap that we traded down into in January and rallied off of. So we do have a small part of this fair value gap still open, so it may want to look to deliver down into that, rebalance this inefficiency. And then once we take out the sell side liquidity, I will want to demand more information and see what price is likely to do. So what that would look like is if we just sweep the low and then immediately rally, I may look for higher prices depending on what signatures we see in a lower time frame. If we displace through the low with the fair value gap and with speed, then I would look for further downside into this next inefficiency down here. So that's what I'm seeing on a weekly chart, bearish order flow. So I will expect continued expansion into our downside objectives. So looking at price on a daily, let me remove these drawings. So just to recap, price traded up into the premium volume imbalance that we've been looking for above the relative equal highs. It rebalanced and redelivered this price level, left it, traded back into it. It's going to act as a balanced price range. So we rejected that level cleanly. And then we found resistance inside of this bearish breaker. Price is traded lower. Up close candle, price trades into it, rejects it. Fair value gap, volume imbalance, price trades into it, rejects it. So now this takes us to the previous week. So just to recap what I was looking for and what it is that we saw. I took all of our attention last week to this fair value gap in here, the city, and the volume imbalance that we formed in here, or liquidity void. So these were the two key premium levels that I took everyone's attention to the previous week. Reason being, if order flow was to continue bearish, we should not rally through this fair value gap or this volume imbalance. And then we see on Monday, we opened, traded higher, traded through the SIBI, but then we closed below it, respecting these key levels. And then we've delivered to the discount objectives we were looking for. I took our attention to this sell side liquidity pool here and this volume imbalance. So we've now closed below it, and we've closed below the mean threshold of this bullish order block. So we are closing below discount levels and respecting premium levels. So that's what I mean by order flow is bearish, and we want to trade in line with that. So that's what we saw last week, delivered beautifully. So we are still seeing risk on, so we can trust our buy models in foreign currency indexes. And I've got some things to share for those specific assets in terms of what I'm expecting and what already transpired. So now going into this coming week, we now have a bearish order block in here. So I want to see how price trades inside of this key level. I would favor trading up into it and then accelerating lower into our sell side liquidity pool. And on a monthly, let me mark out the monthly fair value gap. Okay. All right. Okay, so I would favor an expansion lower, below sell side and into the monthly fair value gap. As long as we stay below this up close candle, I will favor that. If price trades above it and we begin trading through these key levels, then that would invalidate my short bias, and I would then have to just demand more information and see if we are beginning to enter a buy program. However, I'm personally favoring lower prices into this sell side liquidity here. and I've shared what I would want to see for that bias and framework to still be valid. So dropping down into an hourly chart now, we're trading within this dealing range on an hourly. So let me share that. And we have relative equal highs here. So we're inside of a parent dealing range on the hourly time frame. We've spent quite a bit of time in discount. I wouldn't expect price to just keep dropping inside of this discount. I would expect the market to rally higher, offer a premium, so that smart money or investors that know that looking through price at the lens at which we're looking at it, where we want to accumulate short positions inside of a premium market. So what I am favoring is a Judas swing higher into the coming week, taking out this buy side liquidity, and then I will want to see how we react inside of these premium inefficiencies on a higher time frame. The more specific inefficiency I will be watching will be this new week opening gap here, and then I'll make that yellow. So this is the previous week's new week opening gap. I would want to see a reaction inside of here and then go lower. If we rally through these levels, that would invalidate the sell program that I would be looking for. And then, as I said, I would just have to demand more information. So what I'll be favoring going into this week is price trading higher into our premium levels. I would want to see a reaccumulation of shorts and then see price attack the discount levels of sell side liquidity below here and the relative equal lows there. So that's what I'll be favoring in the dollar going into this coming week. So I am favoring risk on. So now going into our bond analysis, let's look at this on a weekly. So price has been bullish on bonds, and then this is the reason we have been seeing pressure on dollar. So bonds have traded lower into this bullish order block. The wick, we use the wick on order blocks that have large wicks. So we see a nice reaction higher off that level. We see on the weekly chart, we found support inside of this volume imbalance, and we have a breakaway gap. This fair value gap right here was unable to be traded to, and that is an extremely bullish signature for price. And then price delivered beautifully into the objectives that we were all paying attention to last week, which was the relative equal highs. Quick question. I know a few people trade bonds in the Telegram group. Do we have a few bond traders? I know I use it for intermarket analysis. I personally don't trade it, but I would be curious to see if we do have bond traders in the group. So we delivered beautifully to the objectives we were looking for. Nice expansion higher into the relative equal highs. And let me show you why I was expecting that and why it was obvious to me that this was the draw. So as I covered the previous week, we're seeing extremely bullish signatures inside of the bond market. Here looking at the consequent encroachment of this fair value gap. Price was unable to trade below it, indicating price is extremely bullish. We then traded higher, fair value gap, more specifically a breakaway fair value gap. Price was unable to trade back into it. And then as I shared with you all last week, if price is to remain bullish, we should remain above this volume imbalance. And then again, I would refer you to the thread that my colleague Tommy wrote on volume imbalances and how to use them in measuring order flow and technical analysis. So here we see none of the bodies were able to close below it. So once we've traded down through it once, twice, this one we hit the bottom end like a brick wall and then we rally higher. Trade back into the high end once more, find support and rally. And then as I said, going into last week, this was the close Friday. Monday, I would want to see price accelerate through this down close candle or this up close candle. If we were to have traded up into this up close candle and found some kind of resistance or gotten heavy, that wouldn't have been as bullish for me because we're already here by the relative equal highs. And the reason I expect price to accelerate as we're getting close to liquidity is because think about it, that if the smart money traders got long in here, they want to offset distribute their longs to these willing buyers at an expensive price. So if price consolidates too long around that level, these traders may pull their orders and that liquidity may not be there. So that's why you'll see that as we get close to liquidity pools, the market will just accelerate and ramp up into those levels to not let those traders take those orders out so that they can be counterparty for our liquidity. So that's why we're seeing strong move higher, consecutive up close candles, attacking the buy side liquidity. So now going into the coming week, what will I be expecting? I'm personally favoring continued upside as long as we find support inside of this fair value gap and bullish breaker. So that's the fair value gap within this bullish breaker. Perfect. So I would favor price trading down into this fair value gap and then rallying higher. What upside level would I see? Well, we have a small inefficiency on the daily chart here that price may want to gravitate to, assuming we continue to accelerate. And this is only assuming that we find support inside of these discount levels. If we begin to violate these levels, then as I said, I may just have to demand more information and allow price to show its hand as to where it wants to go. However, we're seeing bullish order flow. One thing we don't like to do is call tops and bottoms. We trade the market and the underlying order flow we have in front of us, and then we adapt as we need to. So I am expecting price to potentially drop at the beginning of the week, give us some sort of Judas swing to then attack this premium inefficiency. And then once we get there, objectives will be reached. I sit on my hands and allow the market to then show its hand as to where it wants to go next. So bonds, dollar, technical analysis is pointing us to risk on. So now let's go into the assets that many of us trade. First, we'll go into the ES, the S&P market, and then I will go ahead and look at the British pound and euro for our Forex traders. All right, so looking at the ES here on a weekly chart, pretty much a nothing week the previous week, which is kind of what we've expected. I shared with you all last week, it's Passover week. So a lot of large firms, big institutions aren't looking to risk capital on a week like that. And many of them aren't even working at all. So this is why we saw a basically nothing week. And that's to be anticipated with this kind of price action, given the holiday week. So what do we have now in the technicals looking ahead to this week? So we've traded higher through this bearish order block. So that's indicating price is now in a buy program because we're trading through up close candles and not respecting them. So what I would want to see, well, one more thing actually on the order flow, volume imbalance, price unable to close below it, beautiful delivery, giving us confidence in our buy models. So we've traded up through this bearish order block, as I was mentioning, indicating price is bullish. So now looking at this week, we have a fair value gap in here on a weekly. So fair value gap here on a weekly chart, and then we still have the buy side here. Let me show this on the ES1 so we can see the buy side liquidity pool more clearly. So here we have relative equal highs, buy side liquidity. I will favor the buy stops and the traders with their orders above this being targeted. So those are the people with the bullseye on them, and that's where I'm expecting the market to want to gravitate to. So now going back to the official contract, I would expect price to find support inside of this fair value gap. And I will go into a little more the dynamics behind a fair value gap and the fractal nature of fair value gaps and how we can read this in our technical analysis. So we have buy side liquidity up here. We are favoring higher prices on the ES and lower prices on dollar. So as I said, we're risk on, so we can trust our buy models in the index markets. So I would favor trading down into this fair value gap and then rallying into the buy side. So let's break down the fractal of a fair value gap. So these two black lines are a fair value gap on a weekly chart. So what does this look like on a daily? Well, this looks like a higher low. So whenever we see fair value gaps and we drop into lower time frames, it's just a swing low. So the reason the market likes to drop into these fair value gaps is because that's where we're trained to accumulate our positions. So we want to accumulate inside this fair value gap, but why more specifically? Looking at the fractal nature of the fair value gap, it's also a swing low. So we have our eyes and attention up here. Market structure traders, people that you do technical analysis based off higher high, higher low, higher high, higher low. We don't do that. We look at order flow and we look at market structure, but on a more advanced level. We look and we classify highs and lows. We don't just say higher high, higher low. We classify them based off intermediate, short-term, and long-term lows. And this gives us the complete market structure analysis that we need for our trading. But the reason price is going to want to come down into fair value gaps, it may not do it this week, but this is the understanding that I have behind fair value gaps and why they're so effective. Because market structure traders will have stops below here, or they will switch their bias once we trade into this fair value gap because now a short-term low has been broken. Whereas we're looking at this as reaccumulation to then deliver into our premium objectives. So this is stopping out market structure traders and even potentially getting them to see lower prices. So keep in mind what we know about the markets. For someone to make money, somebody has to lose money. So there needs to be somebody on the opposite end of your trade losing their account. So the reason the market does these types of things is to induce them into seeing, okay, market structure broken, we could be going lower. We're looking to buy that, to then attack that liquidity here. They get tripped up on that because they're seeing it as market structure. So this is a deeper dive into fair value gaps and how we can use them in our analysis. So price may not even want to trade down into this fair value gap, depending on how bullish we are, but that's something I will be monitoring going into this week on a weekly chart. Seeing a potential open, due to swing into the fair value gap, and then a rally higher. So now looking at price on a daily chart, we see bullish order flow, down close candles supporting price. What I took everyone's attention to last week was this bullish breaker. And then within this breaker, we have a fair value gap. So I wouldn't want to see price trade down through this fair value gap. We could open the week, trade lower, accumulate the sell stops below this low, and then rally, but price should not rally through the bullish breaker and this fair value gap. That would not bode well for bullishness for me. If we wick through it and then we close above it, that's okay. I'm willing to accept that, especially in a week as we have. It's always important to remember the economic calendar as we're navigating the markets. We have CPI, a highly manipulated news event. So you want to stay out of the way. You don't want to enter positions before that, as it's typically a slaughterhouse. So we'll let that news driver hit the market, get a feel for the lay of the land, and then I'll personally be looking to execute potentially coming into Wednesday, Thursday, and Friday. But I will be careful on Wednesday's trading because after large range days or high impact news drivers like FOMC or CPI, we'll typically see a sloppy trading session after, because typically small range days are followed by large range days. So something to be mindful of into this coming week and how I'll personally be navigating it. So trading below this low is acceptable as long as the bodies respect these key levels. I will expect delivery here into the buy side liquidity. Real quick, looking at the NASDAQ, it's already reached this buy side liquidity. And then I took our attention to these two consecutive down close candle. That would be our bullish order block. And then price traded into it and then reacted higher off that. If we are to remain bullish, I would expect the NASDAQ to not go below these down close candles. As I said, we could trade below the short-term low, reaccumulate more longs to go higher, but I would not want to see this key level violated. So for our NASDAQ traders, that's what I'm seeing. And the Dow, I don't have much interest in the Dow. So yes, that's what I'm seeing for the week. First upside objective will be previous week's high. The second will be this buy side liquidity pool here at the 42.23 level. And then the external range liquidity at the, what level is that? 42.44 level. So those are the three upside objectives I will be looking for, assuming the dollar does what I'm expecting it to do, which is risk on, lower dollar. So that's what I'll be anticipating into this coming week. So going right into the Forex analysis, well, let me drop into the hourly for the ES real quick. So price traded into the key levels we were looking for. We did a 3 drives pattern here, and we also saw an SMT in the NASDAQ. So whereas the NASDAQ actually made a lower low here, the ES failed to, indicating that the ES is under heavy accumulation to go higher. And this would make sense because, well, one, this is algorithmic. The SMT, this is the algorithm tipping its hand to people that are in the know that, okay, this market's under heavy accumulation, get on board. So that's the way I'm interpreting this price action. And the reason I'm favoring the ES being the upside leader is because we have been seeing NASDAQ being stronger. It's already taken out the highs. So the ES will look to catch up to the NASDAQ market and where it's at. So because interest rates are so overextended on the downside, they've been falling quite a bit. This has really given a boost to NASDAQ and tech companies. So I will be expecting the ES to look to catch up. And another insight into ES, the way we use interest rates to determine if the NASDAQ is going to be a relative strength leader, we can use crude oil and interest rates for the ES. And if you think about it, it makes sense. The ES is the biggest 500 companies in the United States. Many of those are banks and energy companies. So if interest rates are higher, that benefits banks. If energy, like crude oil, natural gas, any petroleum products, as crude oil goes up, that also helps out companies like ExxonMobil, Chevron. So the energy companies and the financials get a boost. And another reason the S&P rallies more when oil's higher is because the banks finance all of that. So as oil's more expensive and everything is higher in price, more specifically energy, the financial sector gets a nice boost off that. So there's several factors contributing to why I'm seeing the ES being the relative strength leader. And we are seeing that confirmed in the technicals. So because personally, I look at technicals, fundamental analysis to me, I think fundamentally everything is in the technicals. We can use outside analysis to help support what we're seeing. However, all this is shown to us inside of the charts. So, okay, so yep, we see the SMT here inside of the key level. We're already looking for higher prices because as we remember, this is the daily bullish breaker in blue. Let me pull that over. So this is our bullish breaker on the daily, and these two heavy, thick black lines is the daily fair value gap. So we traded down into this key level, 3 drives pattern, sell side liquidity was purged, and then we see a displacement higher, shifting market structure. We trade back down into the key level here being our bullish breaker now on a 1-hour chart. So price traded into that level. And then this was the NFP news release on Friday. Markets closed shortly after at 9:30, traded down into the bullish breaker and rallied higher off that into premium levels. So given that we have a new week opening, I'm reluctant to share what I'm seeing on an hourly because we could very well manipulate down, fill in the rest of this inefficiency, and then rally higher. Or we could just continue to find support inside of these key levels and rally higher. What I will want to see is how price trades inside of these premium inefficiencies. If we measure the dealing range that we're now trading within, we have a fair value gap in premium, and I would want to see price rally through that and not hesitate. I want to see price go through it, rally through it with speed, and potentially find support at that level, but I wouldn't want to see it flirt with this fair value gap and then drop off. That would not be as bullish, especially going into Tuesday, Wednesday, Thursday of the following week. I will want to see expansion higher to confirm what we're looking for. So in summary, ES, relative strength leader. I am looking for upside objectives, more specifically previous week's low, the swing high here, and this external range liquidity so that it can catch up to the NASDAQ. And this all does depend on what the dollar index does. Going into the euro. So we have been calling higher prices for euro after we saw the SMT here with the British pound. So pound dollar made a lower low, whereas euro dollar was unable to. So I'll actually dive deeper into the British pound price action and how I was able to confidently give you guys the relative equal highs as a drawn liquidity and how the smart money reversal was confirmed inside of this market maker buy model. So I'll cover that after the euro. So looking at euro, Prices traded lower down into this key bullish order block. We've closed below it, and then we've had a 3 drives pattern. So we've seen sell side liquidity taken out multiple times. So one key thing to pay attention to, the reason I was also anticipating a reversal, not just the SMT, is we saw SMT 1, but then we see multiple shallow runs of sell side. When price is looking to go lower or higher, we can see that shown in order flow. So let's look at these examples here. We see a swing low, it's taken out, but not with as much speed as look at how now we take out the swing high. We displace through it and we close above it with aggression. Whereas these lows, it just takes it out anemically and immediately rallies. Look at here how it takes out the high once more, but it's extremely lethargic. It's not doing it with displacement and energy like we want to see for continuation. So this is early signs of a reversal. We know this is a 3 drives pattern here and here, but that's the context and narrative behind it. All the buy side liquidity is purged out of the market because every time there's a high and it trades off it, traders are looking to go short off that. Trades higher, trades off it, they're looking to go short, chasing it lower, and then the market ramps it up against them every single time, taking them out of the market. So then when it actually goes to do the real move, those people that were looking to go short already are taken out of the market and are not able to participate in the true move. And that mostly is breakout artists, people looking to buy resistance broken. So all those people are taken out of the market and then price rallies lower. So now the same thing on the other side of the coin on a bearish example. We see a 3 drives pattern, but we see an algorithmic signature of lack of displacement. Here we see no displacement below this low and no displacement below this low. But then look at how we take out the high. We displace through it energetically with multiple fair value gaps and inefficiencies indicating price is in a hurry. So this is an algorithmic signature that price is bullish, and this gave me the confidence to look for higher prices. And then the bullish order flow speaks for itself. Down close candle, fair value gap, trade into it, support. Down close candle, trade into it, support. Down close candle, trade down into it, and then we rally higher off that. So that's what I've been seeing for euro. Assuming the dollar accelerates down below that key low I was looking for and we see risk on, I will favor the euro looking to take out this swing high. And then let's zoom out and see what other price levels would be of interest on the euro after this swing high. We have a bullish order block in here. So I would want to look at the mean threshold of this bullish order block. So first target would be previous week's high here at the, let's just round it up to the big figure number. So we'll say 1.1. And then the second objective would be the 1.103. And then the mean threshold of this bullish order block, which would be 1.112, would be my last objective on the week for euro. For the British pound, let me go up into a weekly and why I was expecting higher prices for pound. So initially we were looking for lower prices to take out this swing low. It delivered that beautifully. But then look at the reluctance of price to close below this inversion fair value gap. It's an inversion fair value gap because it's a former fair value gap that we extend through. As ICT always says, we're not supply and demand. We cut through candles to look at key levels. So here we extend this fair value gap through. We see none of the bodies were able to close below it. We took out this low, but remember what I just shared with displacement. That's a gem you're going to want to have and apply into your trading. You want to see displacements for continuation with the fair value gap. So look at this low here. When it's taken out, is there displacement or a fair value gap to give us confirmation for follow through? Absolutely not. It trades lower and then it displaces higher. So then looking at this key level, we see the bodies are contained within it, indicating that price is still likely in a buy program. So then we take our attention immediately to the relative equal highs. There's a lot of people with bullseyes right there. The reason being because they trust this double top or resistance or a lower low. So all the retail logic is going to put them in a losing position. So we are looking to attack that level. So price trades below that low, accumulates those sell stops, and then rallies higher. So now let's break this down deeper on a lower time frame. And then obviously this was all confirmed by the dollar index. Dollar traded lower, got softer into the week, displaying risk on. So we're going to look for our buy models inside of the foreign currency. So here we see that SMT with the euro that we just discussed. We see that price took out this low, and then as soon as we took out the low, we immediately displaced higher. This would be our bullish order block. Why would this be a bullish order block? Because it was the down close candle that took out liquidity. So as this candle was dropping lower, smart money was accumulating long positions. So that's why it drops. We rally through it with displacement, indicating that this is our confirmation that smart money was accumulating inside of this down close candle. And then we see price trades beautifully into the opening price, just like our technical analysis would call for. We start finding support inside of discount arrays. Bodies are unable to close below the volume imbalance. Price finds support inside the bullish order block. And then we just expect that all the way through. And then I took our attention here to the buy side liquidity. Relative equal highs, bullish order flow, easy target. Price trades down into the volume imbalance here. What do we expect with volume imbalances? Order flow to show its hand, and we see no bodies are able to close below it. Find support inside of this would be a propulsion block. Propulsion block because it's inside of another order block. So the sensitive levels would be the wicks. So we see here the higher wick of this candle. Price is unable to trade below it and the volume imbalance. And then the algorithm carries us on home right into our objectives as we expected. Breaking this down further on a I think it's clear on the 8-hour chart. So let's take all this off. And then many of you guys will recognize this as a market maker buy model. So here you have our original consolidation. Let's make that gray. This would be our smart money reversal. And I will share why I trusted this as a smart money reversal. And then here we have our terminus. So the reason I trusted that purple shaded region as the smart money reversal is because we've traded below a key low. The SMT was the confirmation of the smart money reversal in this market maker buy model. So that SMT is what we always want to look for as confirmation, and this will confirm the smart money reversals. So then we see that played out beautifully, attacking the relative equal highs that we had our attention on. Same thing on a daily chart, bullish order flow all the way into our premium objectives. So beautiful delivery on the week for the euro, for the British pound, in line with exactly what we were looking for, which was risk on, lower dollar, and it delivered to the objectives we were looking for beautifully. So now with that being said, I will now go to any questions that you guys may have. You guys can feel free to drop them in the chat or the Telegram. Okay, Soren wants me to take a look at gold. Absolutely, I would be happy to. And per our gold analysis from before, it's been delivering beautifully to exactly what we've been looking for. So price traded down lower into this bullish order block in here, rallied higher. So we're still seeing bullish order flow on a weekly chart. And this is confirmed by the lower dollar index. So lower dollar is going to put lift on gold, simply being because gold is priced in dollars. Weaker dollar, higher gold. So now looking at this on a daily chart, I remember looking at gold, and what I shared in the analysis is if we are going to be seeing higher prices on gold, we have a bullish breaker in here and a fair value gap that should not be violated. Change that back to blue. Okay, so here we have a bullish breaker, these two consecutive up close candles, and we also have a fair value gap. So if we are to remain bullish, this level should not be violated. We shouldn't trade down through these levels. Several algorithmic signatures that price is bullish. We actually had an SMT here with silver. I believe, I may be saying the name wrong. I think it's Adam. Adam was asking about what pair could you use to determine SMT for gold, and you would want to use silver. CHEUSD. Forex.com. Beautiful. Okay. So this was the SMT that we saw on silver, confirming that gold was bullish. So the way we would interpret this price action, in silver, it's a little more clear. Price trades down into a discount of the dealing range we're in and reaccumulates longs inside of the fair value gap as we would expect. And then we see a clean SMT inside of these key levels. So we're automatically looking for higher prices on gold, especially with a weaker dollar. And then what I shared last week was we have a bullish breaker, a fair value gap. Price should not go below this if we are to remain higher. And then price has rallied beautifully into premium objectives that we were looking for, being the high from last week. And then if we continue bullish, we should stay above this fair value gap in here. Reason being is because of all this order flow we've seen in here has balanced out this price range. So we're seeing that price has been offered efficiently here for buyers and sellers, so this level should not be violated. So we should find support inside of this fair value gap if we are going to reach for new all-time highs in gold and attack the relative equal highs, which is a very clear drawn liquidity for me. So I would be looking for upside on the 2075 level for gold. So I will expect further upside in gold. And to me, it's a no-brainer. Gold's going higher, especially with everything we're seeing with the economic turbulence, the issues that the financial system is having in the United States, and I will leave that at that. So we are seeing higher gold, but it makes sense as to why cash is piling into gold. It's almost a no-brainer. So someone was asking about a breakaway gap, and we just had one on the daily for gold, so I'll go ahead and talk about that. So what is a breakaway gap and what does it tell us? So breakaway gaps are fair value gaps that are not traded to. And we typically like to see this whenever we're looking to go long or even short. If we see a breakaway gap on the downside, it's likely that price is going to go well beyond the objectives we're expecting. It means its price is extremely bullish. The fact that it's unwilling to come down and rebalance these inefficiencies, that's a bullish signature that the algorithm is showing that price is exceedingly strong and it's not likely to do deep retracements. Because in a typical market, we would expect price to rally. We see these fair value gaps, inefficiencies, more specifically ABISI, buy side imbalance, sell side inefficiency. So this level is inefficient in sell side. So the market would typically want to come up, come down, offer sell side to then rally higher. But when it doesn't do that, that's an algorithmic signature that price is bullish because it's unwilling to fill in these key levels. So that's personally how I use breakaway gaps in my analysis. And whenever I am looking to go long or short, I do like to see breakaway gaps, fair value gaps, or breakaway volume imbalances where it doesn't come in and fill it in. And that to me is confirmation that I'm on side and that price is likely to run in my favor aggressively and quickly. And another thing that I also use it for in my trading is if I have targets and I start seeing several breakaway gaps, I'll even expand my targets because it likely means price is going to go well beyond where you thought it did. Of course, still taking partials along the way and banking those as they make themselves available. But I usually do extend my targets as that's something I have studied in my backtesting over the past few months and years. I have seen that breakaway gaps, whenever we see those, it is an extremely bullish signature and price is going to rally further than we were originally thinking that our analysis called for. KK, what's going on, brother? Do I use 90-minute cycles into consideration when taking entries? Personally, I don't use that. I use specific time elements that work for me. I use the opening prices, and I look for power of 3 on hourly candles, 4-hour candles, and of course the daily and weekly. So I blend all those analysis together to get what it is I'm looking for, but I personally do not work with 90-minute cycles. That's not something I use in my analysis. If you do think about it, though, it makes sense. Each trading session is around 3 hours. The AM session is about 3 hours and the PM session is about 3 hours. So what we know about price is it's fractal. So there's cycles within cycles. This, the IPDA, the Interbank Price Delivery Algorithm, it goes extremely deep, and you could be researching and learning this for years and still have more years ahead of you to learn. Price action is extremely deep and there's so much to learn about it, but personally, I don't use that in my analysis. I shared what I use for time consideration, but I do not use the 90-minute cycles. Patrick, do I look at indices? ES. Yes, sir. I just broke down the ES, what I'm looking for, what I'm expecting in the beginning of this video, with also a top-down analysis to get a feel for risk on, risk off, and what I'll be expecting. So could I expand on how I confirm order flow on a lower time frame, say 15 minute? Yeah, for sure. Let me go to the ES. This is an asset I'm more familiar with. And let's just look at the previous run higher that we've seen this last week. Let me take off all this on the chart. Okay, so bullish order flow on a 15 minute. So let me break down why I was already seeing higher prices so you can understand the higher context behind why we're seeing it. You want to see on the Dow. I personally don't look at the Dow. Let me take a look at. Usually it's sluggish. Okay, it's been trading pretty nice. So yeah, so we've been looking for higher prices on indexes, namely because we've been seeing risk off. So I've been able to trust buy models inside of the indexes. But how would we look at order flow on a 15-minute chart? So we just want to see discount dealing ranges support price, and we want to see discount arrays supporting price. So Dow's pretty sloppy. So we see relative equal highs here. Price trades lower. What would I look for bullish order flow? I personally would have looked for this fair value gap to deliver a discount before reaccumulating higher. However, it didn't need to do that to rally, took out the relative equal highs. So how can we confirm order flow is still bullish to continue expanding higher? Well, here we see a breakaway fair value gap. We also have a bullish breaker in here, these up close candles. So we would just look for discount arrays to support price. So simply put, consecutive up close candles before the move down that takes out a swing low. This makes our bullish breaker. Price trades up, finds support inside of this key level, and then we rally. So we want to confirm order flow still bullish. This is 10:15 going into the New York session. So what would you want to see on this specific Friday if we were to see higher prices? Well, we have a bullish order block in here. So we have a bullish order block in here. And we also have a fair value gap. So if price is to remain bullish and we are going to be seeing higher prices, price should find support inside of this key level, which it did. So we still want to see further upside continuation. What levels would we not want to see violated? Well, we have two fair value gaps here and one below here. So if you were still long, you could trail a stop below this low here, but we would want to see price find support inside of these key levels. And then what do we see here on a 15-minute chart? All the bodies are contained within this fair value gap, indicating that order flow is bullish. So same thing going into the week. Here we have a new week opening gap. So this would be an inefficiency. So we want to look at the close and the open. So now we want to see how price trades inside this key level. So same thing, price trades above it. What do we want to see? Price finds support inside the discount array. Bodies respect it, touches it once more, rallies beautifully. So how would we still confirm bullish price action moving forward? We have a displacement. Where was the origin of that displacement? The three down close candles, our bullish order block. Actually, looking at this price action, I would want to use this down close candle because it's the biggest and the beefiest and it has the lowest close. So I'd be looking at this for our order block. Price trades into it, finds support beautifully. Fair value gap in here, still assuming order flows bullish. Price trades into it, no bodies close below it, and then we remain bullish. So how could we have seen bearish order flow in this example? Well, we're already overextended in a premium. Price has rallied continuously. We've taken out buy side multiple times. And back to what I just shared, look at how many times the highs are taken out here with lack of displacement. This high is taken out with displacement, and then it gives continuation just like we expect. These highs are taken out very anemically. So that's indicating a reversal is likely. And then now we want to see a switch to a bearish order flow. So what you want to get used to analyzing price action is being abreast to the subtle nuances and changes in price delivery. So here we see the switch from a buy program to a sell program. And that's indicated here by the displacement lower we see. Price trades into the fair value gap. We reject it. And price trades into another fair value gap here. Bearish order block. trade into it, we reject it, and then where would we logically look to target? We have relative equal lows here in a discount. It didn't reach that. I believe this was an SMT. So whenever you see that you're targeting a specific objective in price, and then we see that it's unable to actually get to it, but we see one of the other indexes does, that's a key to take profit. SMT tells smart money traders that it's time to take profit and potentially look for a change in the state of delivery. So that's an example of how you would analyze bullish order flow and then bearish order flow. So you'd want to see premium arrays acting as resistance, sending price lower. Hey KK, what's going on? So question was, when you want to choose profit targets, do you just target the PD arrays on the time frame you take entries or higher time frame PD arrays personally? Yeah, KK, so absolutely. I always have a higher time frame target. I need to know where the daily, hourly, or 15-minute is reaching for, and if I can't determine that with clarity, there's nothing to do on the 1 minute. 1 minute just allows me to get precision entries with small drawdown, and that's personally the way I like to trade. I'm a high frequency trader and scalper. So I need to know where the 15-minute, hourly, or daily is reaching for, and those are the levels I will look to target. But I will take partials at key levels as they're available to me. So let's just look at a theoretical example. As I said, I didn't trade much this week. I mean, as you can see the price action, you can see why. I'm sure retail had a great time getting chopped up in that. But let me find an example. Okay, yep, so here, perfect. So if I'm looking for these relative equal lows, yeah, David, SMT for take profit levels, huge key, brother. So there's been times where I've been looking for a specific objective, let's say in the Dow. I was looking for those relative equal lows to be taken, but it didn't do it, but the ES would. And then I would see price then reverse. And then I learned over time that once one of the indexes take out a key low, you want to take profit on whatever asset it is you're trading. Don't wait for it to get to those levels because there's a chance it won't. So let's say you were trading Dow and you wanted to see these targets. As soon as the ES hits those levels, take your profits on Dow. So back to the question, KK. Yes. So how would I use my higher time frame targets? So yes, let's say I'm targeting, this would be on an hourly chart. So I'm looking at these these equal lows on an hourly chart. This is my draw on the higher time frame, let's say. So how would I bank partials in the lower time frames? I'm looking at inefficiencies at key levels. So let's say I were to get an entry here. This is a pretty logical trade, relative equal highs, buy side taken, displacement lower, get short here, attack the relative equal lows here, take bank a partial inside of this discount fair value gap, which is what I would look to do, and then see if the last bit of the run would want to deliver below these lows. So that's personally how I manage partials. I look to take them at key discount levels. Reason being, this is the dealing range that we're operating in. So I would want to bank partials inside of key levels. So trading down into this discount fair value gap would be a logical partial. Relative equal lows here would be a logical partial. I would be peeling off contracts as we get to these key levels. And then this would close the position for me. I would be happy with this run, closed out there. And then the indication that it's not likely to run further was the SMT with the Dow. So that confirms that, okay, that's indication to smart money to start closing off part of their position and potentially look for a market reversal. So SMT tells us a lot. It's not simply just something that we can use for reading order flow and technical analysis. It can also give you a lot of insight in managing positions. Hey, Ricky, what's going on, Ricky Rod? I have a question. Would you ever trade during Asia session or would you avoid it? Personally, I wouldn't trade Asian session, especially with the indexes. They don't move much, and that makes sense. They're American indexes, so they're typically going to move the most during the New York session. They do have some movement during London, but if you are looking to trade Asia session, the New Zealand dollar and the Australian dollar move pretty well during that time. I personally don't trade Forex much, but that's what I use. That's what I would use if I were looking to trade the Asian session. Those two Forex pairs move quite a bit. KG, what's up, my man? Happy Easter. Hope you're doing good, brother. So awesome. So we took a look at the dollar. Let me make sure we don't have any more questions. Okay, so have last question here in the chat. Patrick Coleman, thanks for doing this. Thanks for sharing your time with us, brother. I appreciate it. Much appreciated. You trade the same concepts, but still new to the methodology. I have trouble spotting order blocks. Any easy way to do that? So for order blocks, what asset was I on when I was looking at a good example? Yes, British pound. So this is a textbook example of an order block right here. So a lot of people mislabel order blocks as just a last down close candle before the move higher. There's specific criteria I look for to qualify a high probability order block. Most importantly, the break of structure and fair value gap qualifies an order block. What we see here in this order block is it's a down close candle. And the reason they're called order blocks is because as price is dropping, remember, smart money only accumulates longs in down close candles and only accumulates shorts in up close candles. So as this candle's dropping here below these relative equal lows and this low, there's a lot of liquidity, willing traders with their orders to sell at a cheap price. So smart money wants to accumulate at a cheap price, accumulate longs, to then distribute then to the willing buyers at an expensive price. So that's essentially the dynamic we see in the markets. So there's always needs to be a narrative and reason for why you're doing. These candlesticks paint a very clear story once you learn how to read them, and it just takes time of backtesting and seeing it. The best way to backtest and look at these things is just look at price from a very narrative-based perspective. So here we have sell side liquidity, sell stops, and then here we have buy stops. So just think of it as any other business. If you're a business, you want to buy things cheap and you want to sell them expensive. So, but you need counterparty to those positions. So here we see relative equal lows. Retail is seeing that as support. So when they see support broken, they want to go short. Or they're seeing a bear flag. Bear flag is this consolidation before the drop. So everything retail is looking at will put them in the wrong position, especially if it's arm wrestling, the logic we use, the retail logic will lose every single time. So here we see bear flag, sell side liquidity, it bounced here, or it dropped and then bounced. So retail trusts putting a stop below that. So there's willing sellers at a cheap price. So smart money is going to want to accumulate inside of these key levels. And this is indicated by the order block. But then what was confirmation that this was an order block? We then see a break of structure, shift in market structure, and we see a fair value gap. So this indicated that this down close candle was indeed an order block, and then it acts as exactly as we would want to see an order block act. Price trades into the opening price, reaccumulates more longs inside of these down close candles, and then attacks the key levels we're looking for. So smart money accumulated cheap, and then offset distributed them to the willing buyers at an expensive price. KK, glad that was helpful, man. Thank you. Yeah, KG, that's a good way to look at it. However it helps you internalize these concepts and understand it best for you, that's great. Personally, the big thing behind order blocks is the change in the state of delivery. We see once this up close candle or this down close candle, the opening price is traded through, this qualifies this as an order block. Reason being is because now we've seen a change in the state of delivery from a sell program to a buy program. So remember, all of this is algorithmic. Price is trading lower, so when it's in a sell program, it's following the directions it's coded to follow. So that's respect premium arrays and attack discount. Once we see this order block pierce the open, we've now had a change in the state of delivery. So now we see a buy program, discount levels supporting price and continuously gravitating towards premium. So I hope that was helpful. JK, yeah, absolutely. You can rewatch these. We upload the recordings, and I think they're uploaded immediately. I'm pretty sure. Let me get to my technical guy, Abraham, and make sure that's how it is. But I'm pretty sure they upload right away. So absolutely, man, you'll be able to check them out. Thanks, Denisha. Okay, Denisha, have a great rest of your birthday. I appreciate you spending some of it with us, and I hope you have a great trading week. All right, that's going to conclude this one. Thank you all for sharing your time with us. Look forward to speaking with you guys in the chat, and we'll be live here next Sunday at 4 p.m. So with that being said, everyone, enjoy the rest of your Easter. Take care, good luck, good trading, and we'll speak to you guys later. Thank you.